Hi, this is James Schlug with Westpac London's end of day report for Friday, June the 21st. Well, there's been an extension of the now three-day sell-off on US equity markets, and European markets is down sharply too. That was despite or after earlier gains that have since been eroded. We saw the US market up as high as 0.7% at one stage. The Dow is currently down about almost 0.5%. That's at 14,691. And at the close, the FTSE in London was down 0.7%. The French market down 1.1%. The Germans off almost 2%, and similar losses in the Spanish and Italian markets. I mean, for the US, we're looking at, for the Dow, I think it's the biggest sell-off now since 2011, with markets continuing to worry about the impact that potentially fewer purchases of assets by the Federal Reserve will have on asset markets that have perhaps been overvalued. There was no economic data today of real note. We did have the Canadian CPI picked up a little bit, but at 0.7% over the year. It's still a very soft inflation rate, and their core rate of 1.1% is matching its all-time low. In the UK, we had some slightly better budget figures for the month of May. But what did generate some interest was comments by James Bullard. He was one of the two dissenters at the FOMC meeting on Wednesday. He said that the Fed may yet need to increase its pace of asset purchases from the current 85 billion per month if inflation continues to head in the downward direction that it's currently running. Of course, there was one other dissenter, that was Elizabeth George from the Kansas Fed. She actually believes that the current stance of policy is too accommodative and risks increasing inflation expectations. So there were dissenters on either side, and we had the dovish one explaining his view today. Other than that, well, I've given you the market movements. Not much to report news-wise. Commodity markets are weaker, with oil off almost 2%, $93.29 a barrel. Little rebounds though, modest rebounds in gold, up 0.25% at $1,289 an ounce, and copper is up 1/3%. But very modest rebounds after stellar sell-offs over the last few days. The Aussie dollar's little change too. It did blip about 0.5% higher when markets were doing a little bit better earlier today, but it's back at 91.97 US cents at the moment, so still down around 5 cents compared to where it was a week ago. All right, that's it for now. Other than that, I would just mention a few things happened in Europe this week. The Greek government is starting to fall apart with a big debate going on about the closure of the government broadcaster out of Athens. The government still has a workable majority, but it's looking increasingly fragile. The other thing to mention was that we've got, let's see, Portugal and Ireland in some doubt now about whether or not they're going to be able to exit their bailouts according to the current timetable. We've had the Cypriot Prime Minister in the last week seek to have the terms of their bailout just a few months ago renegotiated, although that's been initially knocked back. And the IMF is looking at not paying its latest tranche to Greece because of failure of the Greeks to put in place the asset sales that they were supposed to and get their budget deficit down as quickly as they were supposed to in their whatever iteration of that it was of their last bailout. So things are sort of bubbling away, not too favourably in Europe, but have tended to be overlooked, I think, to some extent. But we do look for a reignition of European concerns later this year, and that could be a factor that might influence the Fed in terms of the timing of any change in their asset purchase plan. Okay, that's it for this week. I'll be back again next week.